So when's the deadline to switch out of the SAVE plan? With the SAVE plan officially over, millions of student loan borrowers have to choose a new repayment plan for their loans. And though you do have a little bit of time to switch, it's probably not as long as you would otherwise hope. Under the settlement agreement filed in federal court, the Department of Education is going to engage in what's called negotiated rulemaking to establish guidelines and procedures for moving people off of SAVE. And that's going to take a while, as in months, possibly a year or more. But there's another more important deadline, and that's the one set by the Budget Reconciliation Bill that was passed in July 2025. Under that bill, after June 30th, 2026, the only one of the currently available income-driven repayment plans that existing borrowers can enroll in is income-based repayment, IBR. The doors to income contingent repayment and pay-as-you-earn slam shut on that day, and nobody else can enroll. People in ICR and pay-as-you-earn as of that date will eventually be moved to IBR, but not until as late as July 2028. The new income-driven repayment plan called WRAP also is going to be unveiled, but not until at least July 1st, 2028, which means that the only repayment plan option available to people who switch after June 30th, 2026 may be income-based repayment. For some people, that may be the best option anyway. But for others, especially borrowers who took their first loan between 2007 and 2014, pay-as-you-earn may give a lower monthly payment. Some people even get a lower payment under income contingent repayment. And if you're in either one of those boats, switching out of SAVE before June will let you get into pay-as-you-earn or ICR and stay there for up to 2 years. But if you wait to switch and you're not enrolled in one of those two plans by June 30th, 2026, you could end up with higher payments because your only income-driven repayment plan option at that point is going to be income-based repayment. So again, what's the deadline to switch? There is no official deadline, but you should move out of SAVE as soon as possible if pay-as-you-earn or income contingent repayment are a better deal for you, because the July 30th, 2026 deadline for those plans is to be enrolled, not to submit your application to switch. You've actually got to be in one of those plans. And given the processing delays and number of people who are going to be flooding the system, the longer you wait, the more likely it is that you're going to miss that deadline. If you've got any questions about your federal student loans, your private student loans, or any other debt whatsoever, as always, get in touch. You know where to find me.